Mainly what version 2.25 and 2.26 updates consisted of are dynamic risk controls. Ways to manage your risk on a dynamic level and place targets based on reward to risk ratios. I'll start with the trend trades. Okay, we added a few settings. First of all, we have now the max dynamic stop size. What this is a filter. Alright, so whenever you are about to, or whenever the VTA is about to enter a trade, whether you've accepted the alert or it's full auto, then right before it enters, it calculates what the size is based on your selection here. So a swing stop will be a smaller stop, whereas an L7 stop would be a bigger stop. It'll calculate the size of that stop. I'm using swing stop for now. And then it'll filter it. If it's bigger than 15 pips, it'll bypass the trade and it'll wait for another entry. Alright, so this is a way of filtering out trades that their dynamic stop needs to be too large. And the reason is some trades, will have maybe a 40 or 50 pip stop that is required based on the dynamic stop here, and you may only have a 30 pip hard stop with the broker. So basically you don't want to have a 30 pip emergency stop on a trade that would need a 40 pip stop to where its support level is. So this is a way to intelligently filter out trades that wouldn't fit with your emergency stop or doesn't fit with your risk profile. So you can filter out trades here that have too large of a dynamic stop and it will bypass them. The next setting is minimum reward to risk acceptable. If you leave this at 0, then it ignores the setting. But if you enter anything other than 0, for example I have 2.0, it means that it will only look for an exit once it has achieved this risk reward. So say the dynamic stop, whereas it's a maximum of 15, the filter, but say it was only 10. Say the swing stop was only 10 pips away on a specific trade. So for that specific trade with that 10 pip swing stop, it's going to make sure that it makes 20 pips before it looks for an exit. In this case, it'll look for a 2-column roadblock after the risk reward has been achieved. If the stop was 15, the full 15, it would look for 30. If the stop was only 7, it would look for 14. And then at that point, it'll look for your 2-column roadblock. You see here how in this situation, it's set up to look for a 2-column after 10 pips. Well, if you have a number set here that isn't satisfied, this 10 pips doesn't matter yet. It's going to make sure that the minimum risk reward is first achieved, then look for the 2-column. Now, say the stop was 7 pips, or no, I'm sorry, say the stop was 4 pips, and that means it's only looking for an 8 pip target. It's still going to need to satisfy this requirement of 10 as well. Everything has to be satisfied in that situation. There's another setting here, exit trade once risk reward is achieved. In that case, once this 2.0 is achieved, it exits you regardless of any roadblocks at all. This becomes your target. In other words, exit trade once risk reward is achieved is essentially placing your target right at that risk reward location. Those are the settings for the trend trade, so that those settings all exist for the 5-minute trend. It also has the max dynamic stop size and the minimum risk reward acceptable and exit once risk reward is achieved. So that's on the 5-minute trends, and as well as the 15-minute trends, they're all there. Also for the reversal type trades. Okay, so the 5-minute reversal, 15-minute reversal, and the preemptive reversal. Let's start with the preemptive reversal. Calculates a max swing stop size, which is the same idea, where if the swing stop needs to be more than what you set here, in this case 19 pips, it's going to bypass the trade. It acts as a filter. So my stop is at 30, that's just the broker stop, but this will allow us to filter out trades with too big of a stop. This is another filter, minimum reward per risk 1.6. So if 1.6 risk reward to risk doesn't exist at the time of entry, it'll also filter out that entry. Alright, so here, minimum reward risk for exit, that means you have to achieve that risk reward before looking for an exit. So in some cases it won't be a problem if the L7 was maybe 2 or 3 reward to risk away, but in some cases when it's right at the border, by the time you get to the L7 target, maybe you've only achieved 1.0 reward to risk. In that case, the trade's going to have to move through the L7 through the normal dynamic target to achieve that. So it's there for you, but you may get a little less win percentage by doing it, but your wins will ensure that you've made your reward per risk that was calculated at time of entry. Right? And then this also has an exit trade once risk reward is achieved as well. So maybe you don't have to make it all the way to the L7 if you want to just make sure you get your 1.6 risk reward. So this is a way to make sure you get out of the trade once you've achieved the 1.6, even if it hasn't hit your dynamic target. It's basic. So the preemptive reversal has these settings, as well as the 5-minute reversal. So you've got the max swing stop size, minimum reward per risk, minimum reward per risk for exit, and then exit trade once risk reward is achieved. So as an example, what I've done, and I think I've mentioned it already, so for the trends, I've set it up like this. So I've set up swing stop, which only looks back 10 candles, so it's a really tight stop. In fact, I only want a maximum of 15 pip stops, that's all. If the swing stop's larger than 15 pips, it'll bypass the trade, it'll filter it out. And then whatever that works out to be, if it's an 8 pip stop or a 10 pip stop or a 14 pip stop, I'm going to have the trade try to make 2 to 1. Whatever that risk is, exit me at 2. And then exit it once I'm there. Just exit. I'm cool with it. Now you can set it 1.5. You can set it anything you want. And so because it's going to exit once risk reward is achieved, then this 2 column after 10 really becomes irrelevant, because it's going to exit you right as the risk reward is achieved. So I've done this with the 1-minute trends, so swing stop, 15 pip max swing stop size with a 2.0 minimum risk acceptable, and then true to exit at 2.0. And so I've done that for the 5-minute trend. Also swing stop, I let it go a little bit larger, just 20 pip stops on these. I've adjusted the risk factor to 0.5 on the 5-minute trend, but I'm limiting what the swing stop can be, so it can only be 20 pips maximum. So even at the maximum swing stop, it's going to be 20 pips, but a half position. It's only going to be 10 full position pips I'm risking on these. So I'm only going to accept the ones that fit. 15-minute trends, same thing. Swing stop, but I allow a 25 pip dynamic stop. And also, this is at a risk factor of 0.4. 0.4 at 25 pips, that's actually 10 pips also. That's 10 full position pips. It's basically risking 1%. Alright, so it's risking 1% per trade at the most. We could get trades that have smaller stop sizes, obviously. The maximum allowable is 25. So we'll get a lot, hopefully, of 20 pips. And we'll get a lot of canceled ideas too. That's just how it's going to be. We're going to get less trades by making it so restrictive. So we'll see how it plays out with the win percentage.